Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it was Monday and the start of the week started on a positive note and it just kept going all day. Continuation from Friday's reversal, continuation from all those outside engulfing candlesticks that were put into place on Friday, giving the Bulls back the ball, and they did something, they took it to the end zone, once again. The Bears couldn't stop, many levels of resistance areas that you all had different choices to make as far as making adjustments around. I know coming in on Friday, nobody knew what a really, really weak jobs report would mean. Nobody. Everyone had an opinion. What would it mean? Because when the Fed left rates unchanged and we sold off hard, it felt as if the market wanted stronger reports to potentially get some kind of raise or lift off at some point. So that was the narrative. So at the bottom of the range or near it, when we weren't even really drastically oversold, when you got that jobs report, that was 140,000, and then three other reports that were really weak, nobody knew what was going to trump. Could the sells have enough control to break below the range, or, could we retake that 1900 and then figure out if it's a feeble move, a powerful move, and, does it have follow through? So anyway, you go to the chart here of, the SPX, and you will see that here is the bottom end of this range. Okay, first of all, you had a red dog reversal right here. Some guys were saying, thank you, thank you, thank you. I went long the SPX, based on your red dog reversal strategy. If you did that, some guys, 1879 was that low. We went below it by 6 handles, or actually, sorry, 8 handles, and then closed above it. Some guys went long here and said, I'm going to stay in this. We just came in from above 2,000 with the topping tail after breaking this ascending channel. Good risk reward right here, just in case we get what I talked about last week, more of a W bottom, because obviously the V bottom wasn't what happened, especially after that topping tail. So maybe the W bottom. So if you did get involved on that day, congratulations, you had an unbelievable trade. Maybe hopefully somebody kidnapped you, because if you were in front of your screen, you might not have held it. Anyway, then on Friday, okay, which was right here, you had that support, which we were talking about in the spiders, was 89.50. Here was 1900. Went below it, but to 1893. So 7 handles below it. And at that point, you didn't know what was going to happen. Okay? But if you were actually in here versus there, you said, okay, I'm going to give it to the lows. That's my strategy. That's how I swing trade. So anyway, if you were flat, because a lot of us go flat into a jobs report, and you were pressing here, like I was pressing, thinking that maybe now we get a real undercut, kind of like what the Russell did, kind of like what we did, back in July of 2011. But anyway, it came back above, and that's when I pretty much covered. And you also had a decision to make right here with this lower pivot, because once we took out this 1927, there was a void to at least 1950 where we closed, and then we closed so strong. Why would you go out short? Most people probably would go out long, considering a reversal, closing strong on bad news, what's going to get us lower, and then lo and behold, boom. That's what today is. So now, I guess take this and go across. So what do we have next? You have a point of reference right here, which is 1989. Then you have the moving average curling down here at 227, and then you have the topping tail resistance from Fed Day. So at this point, 1, 2, 3, 4 big up days. The oscillator probably went from minus 55 to probably plus 45. So most traders probably are going to be hoping for a gap up to perhaps short, to get some kind of, move lower into this resistance. What is developed here is what we call a pain trade. So a lot of guys ask me, hey, Red Dog, what's a pain trade? You talk about the pain trade sometimes. I'm like, what a pain trade is typically when people who might have been short on Friday said, you know what, this is a horrendous economy. Why is the market up? It's going to go lower, and you short the open, and you add, and you add, and you add, and you stay short. And then you short the gap up today for it to close the gap, and it doesn't, and then you caught short with a horrendous average cost, and you hate the world at night, okay? And unless, I don't even know unless, but you're going home very uncomfortable, because who knows how further this goes. Hopefully we get a pause even to let you guys out. Then you have the guys who missed the move, who might have been bearish, who, didn't catch it, because I'll tell you I didn't catch it well, and are upset that you just missed a big 2-day move or so, and you want to get in, but you want to get in responsibly. You don't want to chase, so you're waiting for some kind of pullback. So you're waiting in pain because if it continues to go, you're going to feel like you missed it. So you're in pain because you're missing. Not in pain because you're getting your clock clean short, avoiding and being stubborn around different pivots, but you're in pain because you're not long enough. So anyway, you go back to the chart. So this is what I would love. Let's do it with the spiders, because the spiders now has a gap up to measure. So I think the best setup, which who knows if we get it, okay, is tomorrow you get a mini gap up, okay, into resistance. It sells off into it and goes back below today's high. And then the following day, perhaps you get a little bit of a gap down and you build a nice little flag above this gap, holds the gap for power, and then I think enough traders would be wanting to buy above this descending channel here because we just digest a little bit and charts rebuilt and you would feel a bit better. But the market this year is like the year of the mispositioned trade. Even here, everyone who was trying to catch a short, okay, might have got squeezed out of their shorts on this outside day into that, and then if they didn't switch gears back here quickly, boom, there was your 3-day down move that took you all the way into that flash crash low. And then since then, it's been a methodical but / noisy trade. I guess you had another decent short here when you had the topping tail and you had your gap down. But anyway, so here you have this red dog reversal, okay, and then you have another red dog reversal. And now if you didn't make that, now you have to be patient, work for prices, and do that. So we'll see what happens. If we were to gap down tomorrow, I guess some shorts will be upset if they didn't go out short because they wanted to short some strength and have some points of reference. But anyway, so that's why everything is a little bit painful, because when it's fast and furious, people get a little worried. So anyway, that's if I was drawing the chart, that's what I'd like to see. But we'll see what happens tomorrow. As far as do you get another gap up or do you get a gap down, etc. Okay. So at this point, we'll wait till then. If you were doing stuff, maybe you're in stocks versus indices long, because there are some stocks that could outperform now. A lot of stocks had big moves and are coming into bigger resistance. Some reclaimed moving averages and look stronger, but who knows if they pause and let you in or they just continue. Just so you know, real quick, let's go back one more time. I'm not saying this is going to happen, but I do remember this. Oops, sorry, what just happened here? This October, okay. This was last year. Okay, it feels like a different pattern, but last October, right around here, okay, I remember, you had this V bottom, which obviously we have a W now, but here was your V bottom. Okay, this was your first move, and then everyone thought we were going to stop right here, and we paused, and then that's when shorts laid back in, and then we opened above, and they got squeezed here. Then we came up to the old highs, paused again, and then continued to new highs. So, that move from October into mid-November, look at the size of that move. I don't think that's the case now. I'm just saying, if you're going to short levels, make sure you give it to the levels. Because anyone who, missed this move and said, oh, I got my little red dog reversal right here and made good money that day, who held it, lost a lot and lost a lot of opportunities as it went back higher. So anyway, fast forward to this spot, we'll see what happens next. Let's delete that and delete that, because all we know coming in tomorrow is we have a new gap up. Lately, lots of gaps have never stayed unfilled. So hopefully at some point, maybe we do fill that and then get some sideways action so you feel like you could buy here for another move. But if we go straight up, again, shorts are going to be taken out to the cleaners and guys are going to feel like they missed out. So then we go to charts. Let's go to best in breed first. Google. What did Google do on Friday? It reclaimed all its moving averages with this trade above this pivot, and now it's above moving averages at this point. I don't know if you could chase it, but let it hold above here, and then all of a sudden, you have a break above the descending channel. This is set up good into earnings, or better than other stocks. Amazon, same thing. We talked about it reclaiming its moving average. It's on my note every day. It's not the easiest to trade. Took back the moving averages yesterday, and then gave you a gap up, some power, and now it's back to this resistance. Just because it's at this resistance doesn't mean you could blindly short it, but probably worth taking a little bit off and then seeing how it reacts around there. Last time, after a huge base, it just busted through and didn't look back, so shorts got annihilated. At this point, not saying that's going to happen, but above all the moving averages, a little overbought, but it's one of the better stocks out there. What you don't want to do is, unless it's a cute, quick trade, you don't want to short the better acting stocks out there that especially are above their moving averages, because that means they're technically better than other ones. And even the other ones that are completely annihilated and broken for the past 2 years, be careful there, because they're down 80, 90% off highs. They could easily go a little bit further. So, just because things are bouncing doesn't mean, they're easy shorts also. So you have to really work for prices either way. What's the other strong stocks? Let's go to Facebook. Facebook, back above all the moving averages. Broke on that Friday and then, held, did a little bit of an overthrow, held 3-day support, and, big day on Friday. Now let's see if it could, go sideways for a little bit. Then at some point, this is in the game to take out its descending channel. So, so Google, Amazon, Facebook all they still look good. Yeah, they still look fine. Apple, on the other hand, has been a little weaker. I've been trying to focus on it less. You could say that it held this support, but it is lagging. It's below all the moving averages, so it's weaker than other things. At this point, we'll see what happens. It was weak all day. This was, I think, up 30 cents, and the Dow was up 300. So we'll see what happens if it pops back into this range or stays weaker. And basically, you have like a little bit of a channel like this. This was one of the first stocks to break its channel to the downside, and just definitely not acting well. So if it's not acting well, there are hopefully better things out there for you to trade. Tesla also, didn't really, give any bang for the buck today, as it tries to rebuild a bit. You had your engulfing bar here it was up $3, came in, and I guess now you could trade versus this, but this to me doesn't look like a strong stock that you should be taking home overnight. Maybe it has news to help that or whatever, but this still has a heck of a lot to prove. Some guys were trading Priceline. They wanted my opinion on that. Priceline looks as if, you had your big red dog reversal here, took back the 200-day almost, big move up, topping tail, so I would have got out of this if I was long, and some might even be short versus the highs here for maybe a move down somewhere in here. What was surprising today? Twitter, decent move. First time you got a 2-day move in a while. I'm not sure if there's going to be another one, but if you look at, let's go. I haven't done this over a while. Good volume. I want to get some volume up here. I do it usually at my own computer. But if I can't do it right now, but if you look here, there was some volume attached, and this now took out this range, so it's back in the game at least, maybe for some more follow-through. Now that they have a CEO, maybe they priced options, who knows, but this could continue. 2 days, big volume, we'll see what happens. Maybe it tries to get up towards 30, and did close near highs of the day, so something. This FIT gave us a trade, but it wasn't so blockbuster, still building. It needs some kind of catalyst, I guess, or it just needs time to rebuild. I would be in it versus spot as long as it stays above 37. If you were thinking you were going to buy it above the moving average here, hopefully you're in a little bit just so you don't just buy it there. If you're cheating and buying it now, I have a little bit also. Chances are if it doesn't get through there and turns down, you lost a little bit because it never really triggered. But we shall see. At this point, it looks fair. Fair, B plus-ish. Banks played catch up today. Goldman Sachs gave you that outside reversal here. We're using this pivot and came back into the 21-day. This top end of the range is here. So if these banks want to play catch up, which they really have no reason to, but the market's the market, just be careful. That's a bigger spot. Here is another spot right there. JP Morgan also popped right back up. Still below the 200 stay, still not the healthiest looking chart. Gave you that reversal on Friday and gave you some follow through. Reversal into follow through. That's how traders make money. And here it's right back into resistance. If it wants to push up, still has some room. So what you want to do is you want to figure out where there's room to and where there's a wall of resistance. And at this point, they've pushed through intermediary resistance and they haven't really met those walls yet. So if you're trying to be short, I guess you can't be too perfect. We've seen that this year in the market, but I would wait for the wall. You go back to the spiders, the wall comes in a little bit closer. If you take this out of the way, sorry, let's go on here. There's a few different walls, all right, anyway, well, we won't go back to that. But the wall is right around here. This is the wall, 200 that they could play around with. Last time it went there, but it came from higher, pushed you and fell. This time, maybe it hangs around here, but I hope it pauses. XLE, very interesting. Big up day on Friday, first time in a while. It had a big engulfing day of that magnitude, and you had your follow through. Look at that. Took back the 21-day, first time it took back the 21-day in such a long time, well, almost since, what is that, since this last spring. So if you needed a signal to cover some shorts, Friday was your day to cover some shorts, and you didn't, and then you're also out of the way, you're out of the pain. And if you were looking for a signal to buy, this never made it down to the August 24th lows and engulfed it, closed through the prior high. That was your signal to buy, and now you have a little bit of follow through. If you took the trade off, congratulations. If you're waiting to see if more develops, let's see if it holds this gap, and you have another resistance going across right here, and then who knows, at some point you might even try and test higher prices, and that would also help the broader indices. They threw everything at oil in the past 2 weeks, from Goldman Sachs downgrading it to the inventories, to this, to that, to, this was your first igniting 3-day move, and then it held that 1420 the USO this entire time, and now we'll see if it could get above the upper end of the range, and if it does, then some of those oil names will probably continue, and then that'll also, again, help the broader indices besides everything else. Some guys were looking at CVX. We talked about that mid-end of the range, and if it was you and you were in it, you just had a nice little trash for treasures trade. I know it was a little wishy-washy Thursday, but this was Friday, and now boom. So, if it wants to continue, continue. Guys, just don't blindly short this because you're used to shorting this. Okay, if you remember, this stock, was really your sell up here when it broke below the 8-21 day, and then your confirmation sell, and then here's when it lost the 200 day, and that was around 120. So if you're just shorting it now, it's come down a lot. So you want to be careful. This thing could even come up if it really wanted to and test the 200 day. A lot of people were playing for this to be, buy in the first quarter for a second, third quarter bounce back. Instead, they bought it in the first quarter, and then they probably capitulated it out into the third quarter. Now maybe you get the better bounce because nobody's looking for it. That's just an extra thought. But anyway, this was a move above a lower pivot, and now, there's definitely some room into moving averages. So just want to be careful there. You just don't want to blindly short, especially if you don't have the liquidity to stay with it or the wherewithal. XOM, also cleared a mid-level pivot for the first time, and yes, takes some off into strength, but it too has been absolutely annihilated. So if you're just looking to short it because it has been weak, okay, but just be careful. Look at this is when this broke the 200-day up here. Here's when it broke the 8-21 day. Active traders get out here, institutions get out there, and this is where it is down here. Good opportunity, good treasures for trash trade, and this too, if it wanted to really squeeze the envelope, it's got some more room. So just be a bit careful trying to just blindly do stuff. I've seen things get streaky. Some guys were playing this SUNE. This too. Look how annihilated this stock has gotten. Here is when the trend broke. Right around here, this is when upper support broke. So this was a spot to get out. That was a spot to get out. When it lost at 200, that was a spot to get out. And now you finally had your first little, 2-day move. Some shorted it today, but I'm telling you, like these things, I remember Smart Money said they were buying it around 20 or around 14. Well, it's still only $9. So we'll see if there's a bit more room here. So if you bought it on this one day, you can make, in this business, you can make 10 to 30% on something that's been absolutely annihilated. Look what this did since this outside reversal. That was a sell signal, just to show you a pattern, to learn from, and then slice through there. And then people are trying to buy a dip here. You get out when it breaks. And for now, the bottom feeders, maybe there's a little bit more room. We shall see. Same thing for something like this. I know guys are trading this XON. This too, what I know it was as high as 72. But it probably shouldn't have been up there. Here was, your breakout failure, get out of Dodge. Here was your outside day. If you weren't out of Dodge, get out of Dodge. Here was that ascending channel break. So now, kind of bounce, maybe. You had a small reversal here. So we'll see if this could lead to perhaps a move back up to this area, or maybe even just here. But make sure that this is your out, and know that things like this are risky. I know for me, I started looking at this VRX, and thank goodness, this is what helped. This is what kind of threw me off also, I hate to say, on Friday, because I was trying to play this for a move above 180, and couldn't do it when the IBBs were going, so I didn't take it. And then you had that secondary announcement, and then I was going to take it on the close, and then boom, Barron's, and this still looks like it could be trouble. For those of you in Redler All Access, I know a lot of you guys were happy, because you found a nice trade here. Well, you know, this was your double bottom. Here was your push through a pivot to trade. And then now you had a bit of a red dog reversal into resistance. And now we'll see if it could go sideways here for a little bit and then continue up or not. So at least this one, you know, a lot of people were just shorting the market because the IBBs went red. You know, yes, it's good to look at, but it's not the end-all be-all. But if you did short into this area, you know, at least it was a trade for you. And then now we'll see what happens tomorrow. And if you did get long into this, I think I said buy 298s with a stop at 290. We could see 315. Well, you got 323. And now we'll see where we are moving forward there. So in summation, you know, we've seen these big two-day moves, and it's great when you're in them. It's definitely hard when you're fighting them, and then it's also hard if you're sitting on the sidelines. So figure out of those three spots, you know, where did you fall in? So then next time we do have one of these type of scenarios, whether it's to the downside or whether it's from a level more to the upside, you're not sitting on the sidelines, and at least you're not fighting it. You know, we've also learned don't have opinions and try and drown out the noise when you get into these crazy areas. You know, when the oscillator was minus 55, you know, then you had friggin' Uncle Carl come on TV and say disaster is going to strike. You had Dennis Garman on the Tuesday before, the day before, saying we're going to see 1400, 1470. So it makes sentiment think once we break, you know, 1870 or 1890, we're going to get that huge move, get short, instead of looking for or reading the tape when it reverses and doesn't go down, and then you find that nice reversal like Friday into today. So for me, I write my note every day. I read the JP Morgan note. I read a lot of institutional stuff, and everyone was so damn bearish and kind of, you know, it's my fault, but, you know, maybe I got to get back down to just reading the charts and putting together my prep and watching the reaction versus trying to, you know the smart narrative of what the market needs in order to act well or act poorly. So anyway, we'll figure that out as we come. We'll see how we act at this upper end of this lower range. We'll see how some of these leaders act at these descending channels because they're all near there, and we'll figure out if there's a more comfortable setup now. I know it's not going to be as big, but it could be still profitable and better than just revenging. Have a great night. I'll see you tomorrow. That's about it.